Yeah, good morning, everybody. You see, it is a high volatility, and this volatility was lifted already here when starting the pre-market at 8 o'clock. That means we were overbought. You see this in the overnight session. They even built a double distribution, a distribution with a volume edge around the 80 area, 85, and then even a second higher distribution. But this was not confirmed, not by time and not by the volume. So this was about very interesting how market would react here. And you see, it was overbought. That means bigger guy had impact and pushed the prices now lower. And you see that the stock market a little bit recovering today. That means at least today, I mean in the pre-market and now at the open. Look at the DAX, you see it recovers back and hit already areas around the 11,630 area. And so what is very clear to see is when you're looking then at the trading screen here, that the market already played some volatile moves out today. You see this, a very volatile morning. You see this also here, the candles in the delta. You can see how they making some bearish and bullish pin bars. And you see that if they reject back to this area, then they found new sellers. That means lower low, lower highs. And now they're getting into this play of my hypo number 2. That means even with the pre-market, they already played the hypo 2. That means they made already good points and ticks to the downside to get to this area. The area where I wanted to see increasing sell volume, the 178.54, and the weak pullback, of course, and you see then holding and targets at the 47, 40, and also the area 28. And they already hit all of those targets. And you see at the 178.54 with the open that they made it through already before open happened, before the cash open here. You see they got into this yesterday value high with a lot of volume. You see this here. You see that the pullback scenario was very weak. Compare this move to this here. And then you see they found new sellers and made then target number 1, 2, and even almost number 3. So 3 would be around this volume edge. You see this in the composite profile on the right side, which is a picture of the last days. And this is very, very impressive now. That means no trade so far. They tried to play at hypo number 1 at the 54 level. You see this here in pre-market. You see the rejection on the downside. You see a double rejection kind of move with this. And then they hit the volume edge of at the moment profile. So you already had your chance here in the pre-market for my hypo number 1. See this here, range long levels. 820 was 70. This was taken out to the downside and then to the bottom side, and then 54 got played. Then hypo 2 is played now, and long would be only if we get above the 81. So that means you see we sum everything now up. Hypo 1 was played successfully, at least hitting the target 1. Hypo 2 now was also already played around 8.55, so that means in the auction phase before the cash open. And now what we need to see is a stabilization, either within the yesterday value, the computed value. That means that we stay within this main value, is from separated by the LVN from the 38 area down to the area of 20. So if we stay within this area here, within the yesterday value, or the main distribution, the middle distribution, where the most impressive long started from this high volume edge 24. If you stay there, I want to see first a balanced market before getting into a trade. Why? No, because my hypo already played. So that means the market already showed its typical streaks of market movements. It's rotational, intraday rotational swings. So that means we have already some we've already seen some major moves where you only could have profited if you have taken on those trades in the pre-market, which I'm not doing so far. What else then can you trade? The only thing I know then what I can trade is to get into a range trade if we get into a stable and normalized distribution. That means I want to see volatility is getting back up a little bit, it's getting down a little bit to normal, switching back to normal. And if I see this and seeing also normal distribution staying balanced within this yesterday value, then I'm looking for a range trade. So as long as this is not happening, we just can sum up. Something extraordinary today is high volatility in the pre-market. Number two, we have already seen a major kind of normal, major kind of intraday swing, which gives us our ticks where we're waiting for normally happening after the cash open. And number three, it's still high volatility. So nothing to do for my plays and for my setup. So you don't get any information from me so far, as long as I don't see some market mood, normal volatility, where I can play my plays. This would be then a range play right now, as nothing else then is prepared right now. All right, so if you have any questions, write me a message. I will answer it, and we're still for free. So yeah, use this opportunity to get more information. I will always try to explain reasonable to first what I see from the technical side in context to the big picture preparation with my hypos, and number three, and also will put some light onto my mindset, which makes everything calculating them together makes a consistent profitable way of thinking for trading. So we will see now. So test 1, 2. Okay, you see right now they traded up to the edge, the volume edge. This is the area, remember again from my hypo, 54, long and short. You see this? I told you already they played the short here, and now you see that they traded back to this edge, 54 to 56 here. See this here? You see responsive selling first, 1 time, 2 time at the top area, trading back to the area where the open range was, getting back to the high, try to play it again, and you see this time they already used the POC, the VPOC at the moment, to bring a new big, compared to the average, bigger high volume, buying volume. You see this here? That means, boom, they played it now again, a little bit stronger, even from the POC, boom, and traded back into this area. This means they trading back into the pre-market distribution. Where are they right now? All right, this is the main distribution from the pre-market. Even the pre-market, due to the higher volatility, is a B model. That means now we are in this value again. You see also they provide liquidity at the edge here, at the 57 level, 500 contracts around. So right now they try to stay within this value. So we're about to get a little bit more normal here, and we are also seeing that the low is rejected. That means the volume edge from yesterday, from Friday market here, see this here, this area, LVN 3940 area. At my hypo I said that this is our target area 28 to 24, 47, 40. So the 40 area was rejected here. You see this? 40 area, high volume node. You see where the longs yesterday started from this distribution, back, boom, coming in. So right now we see some V-shaped transition from short to long again, getting into this main value from the pre-market. You see this here, this is from the pre-market here, and also from the evening market. So that means prices now have rejected it. Also in the 15 minutes, we are within this profile, within from the overnight and pre-market move. So that means now a stabilization here within would be cool to look for a possible range play. But we want to see market stays then in a balanced mood, and we wait for this to happen. You see, we're still having a high volatility today. That means due to the trade war, the escalation initiated by Mr. Trump again, um, it is a really volatile market. Even though London, London is closed today, as Matthias already wrote in the stream, due to the holiday, the bank holiday in London and UK. You see, there is a high volatility. That means the book is, of course, is quite thin. That leads, of course, to high volatility, but also you see that there is some trading taking place. So it's not like there is no trading today. This is a difference because we have many a time when we have really, for example, we have a US holiday, and you see that there is really low volatility. Then we also often see that there is no trading taking place. That means we have a really tight range, and it may look like then after the open that the market, we have the open and then we see some tests, but overall we see a very tight range. So this is not what we're having right today. No, absolutely not. That means for today we still are in a market that is impacted by the trade war escalation. Also, there is still the G7 summit in France, and maybe a lot of traders are still expecting or not so feeling secure to take on, of course, larger positions, but it is more like a zigzag market today, trading around, and it's not the kind of market I need for my setups. So nothing to do so far for me. You see then also the weakness here, that they fell back into this lower range from the morning. So they tried to mate it up, traded back to the edge, tried here to stay then in control, but you see as they're reaching the lower edge, shorts coming in again. Shorts, taken out, getting in at the POC. Now even have the chance, if shorts coming in again, to see the 49 edge. Again, so that means you can trade here, you can participate, but not for my place. So now for my place. So you can see here, this is typical picture in a short-term algo influenced market today. High numbers within a area around the at the moment VPOC. High numbers on both sides. You see blinking orders, liquidity. Sorry, you see blinking liquidity popping up on the up and down side. You see here, coming in, getting out. So this is typical algo handling at the VPOC, at the moment VPOC. When you look at the delta, you see something also very interesting here from the moment, from the pre-market, even starting within the area from now 9 to 9:30. You see this is really typical. We have a thin order book, we have only short-term based trading. You see in delta a zigzag up and down sticks and pin bars, bullish and bearish, changing, not giving you any direction. You can just look in context to the big picture to see where we are. Still at this area 54, at this edge, what was taken out first, couldn't hold. It's now getting back. We're looking now for acceptance, testing maybe the lower edge at the 49, ranging around this area, still having the separation, May going back, seeing algo activity, seeing already responsive selling again here at the upside at 9 o'clock 44, sellers coming in again. So that means you don't have to trade. You don't have to trade. I will tell you this because it's very important to know that your plays are working good for some kind of market moods. You have a market mood, let's call it a very slow volatility day, a high volatility day, have a day with large orders, having a day with a small range, having a day where below a value, above a value. So there are a lot of factors impacted my thinking of plays. I have actually 3 kind of plays in my playbook that works the best for me. 3 plays that are working for a range market and also for a trendish market. Always the best would be a normal volatility, a little bit lower, a normal, and a normal speed of orders. Normal speed of orders means that we don't see a 20 minutes and for moving like 3 or 4 ticks making the range, but very slow, let's say some very long time in between 2 orders taken in the order. Today we have normal, a little bit higher speed, and also we have a low liquidity in the order book, still making good ranges, making good streaks. The rotation is quite big, and this is a day for me where my plays I have developed are not high probability to work good. Number 1 is we have a little bit higher volatility, means we need a little bit higher stop for the same setup. Normally for the same reward. That means if the stop is higher than my normal reward, stop risk is, then it means we have higher risk than my reward is. That means we have less than 1 risk reward. Because you may not only need 4, but you will need maybe 5, 6 ticks stop. And you see this very good in this moment when the liquidity is thin in the order book. You see this order, see this buying impulse here. They took out the high, and look how it was 9 ticks for the Bund, or here. This is a very high volatility in Bund. So where you enter when you re-enter a play to go back into this value, where do you enter? Do you enter with the pullback? Okay, where do you want to see price go? Where you want to see the pullback delta, where you can decide when it's weak or not. Okay, this will be the impulse out of this back into this range with a risk we don't know yet, but a reward if we enter around the edge here at the 56 with a reward to the 62, means 6 ticks. All right, you see this move then, we pulling back. We see as they pull back, it stays at least bullish, but where you enter? Do you enter here? Do you wait to get back to the edge at least? We don't reach it yet, by the way. Or you still want to go into it only setting back 1, 2 ticks. So if you do this, maybe I'm looking for a pullback and with a weak opposite volume, then we may get into this at this moment. What stop do you have? What is the tolerance for a stop? This time you would have worked out with a 4-tick stop, all right? This time, when we took out the 54 level, boom, we made already 10 ticks. Where's the pullback coming to? All right, the pullback is coming to the 51 level. You may look for a cheap entry around the area where they take out, where the edge was. And look, where was the edge? The edge here was at the, exactly at the 56 level. That means here was the first time when they played our hypo 1, and hypo 3 was then, boom, they took it out. We didn't get this level. If you think, wow, we already made 10 ticks, and you see the next candle is open here with a weak pullback, that's okay. And you enter here. See how far your stop must have been here. 1, 2, 3, 4, 5, so 6 ticks. That means high volatility means more stops. But where was your target area? My target area was even reached within the with the selling, when the initiative sellers came in. They already reached the area of the target number 1. This was 40. Remember, my hypo number 1 says 2 short into 54 and targets 47, 40, and then 28 to 24. So they took out, of course, the 47. Boom, they took out almost the 40. So where's your target now? Okay, maybe the 30 area. All right, let's say this is the 30 area and you're not sure, because you see there's the LBN at the 40. We didn't reach that. So if you enter here then at the 46 and you need a stop at least from the volume edge thinking to the 56 level, and you need 10 ticks risk, and on the downside, on the bottom side, you only have a reward possible of maybe 4 or 5 ticks. So this would be stupid. You know what I mean? And you need to get paid at least with a contract and have a high probability to get paid with one contract. And now see this. What happens? We are now at the situation when I told you that we're having a problem to get higher here. We saw the responsive selling, you remember a few minutes ago when I told you this? And now we had a high probability to test this range edge. They tested, they even got below, and now even tested the 45 area. And you see increasing sell volume even here at the 45. So not right now they're testing the open range. They're testing the area where we saw the rejection from today. So we're now at the area of a strong low. So this is now a good opportunity to look here for responsive buying. Yes, it would be in a normal market, in a normal volatility with normal liquidity in the order book. But as we don't have this, I'm not sure where to put my stop now. That means I will stay flat because don't get me wrong, but I will tell you, I would call this, I'm just smart enough to know that I don't have to make money on every day when the market is not giving me a setup with a good risk reward. And if you have problems with your calculation and seeing your calculation, okay, my risk would be with this strong rejection. Take a look here. All right, where would be the stop? For me, it would be at least 2 ticks outside. That means maybe here at the 28 level. You're entering maybe around now, seeing the responsive buying. You wait for a second rejection. You may enter here, and now you see where is your stop then? Where is your target area? All right, we're trying to get back to our at the moment PUC. So this will be maybe around here, but there's also the longer time before POC. So maybe here's the target, or here's the target for our position number 1. So for me, this would be my first target area. That means we have a risk reward of 0.54. That means only a half of the reward compared to the stop. We need to have a certain tick stop because they may test lower areas. We have a high volatility, a thin order book. Look at the dome. You see 100, 180, 100, okay, 300 with a little bit liquidity, 150, 160, 180, 160, 100, 120. So very, very, very weak order book. That is only about the half of what we see normally. Normally we have around 300 around contracts. So this is not what I'm looking for. So if you take on this trade, you're having bad risk reward. And that's why I'm not doing it. And even you even so you see here liquidity is placed in the bid at the 41 with this contracts here. This is 500 contracts at the moment. You see that also popping in and popping out. This is algo trading. That's a little bit spoofing. You see this here? As soon they came closer to the level, they take out the liquidity. I told you and I showed you many times, weeks and weeks, in a normal market, normal volatility, normal liquidity, that this will not happen. You will see this kind of liquidity. Of course, we have a long-term liquidity and we have short-term liquidity. But if short-term liquidity is created, all right, and prices came closer, it will not disappear. It will not disappear if it's real. But this time you see, this is spoofing. This is spoofing. So you don't know, you cannot be sure if they really are interested here and support your way of buying. And so, even though in a normal play, again, this would be my range play where I'm looking for the double rejection, responsive buying, because this is the volume edge the next. And we only have this target at 49. And the problem was, again, on the bottom side, we cannot be sure with the higher volatility how far will we go. So don't trade. Don't trade if you cannot measure and say this is a lucrative trade. Everything needs to fit together and have to be seen in context. If you're not able to have everything in context and everything can be measured at the moment where you want to execute, then this is a lousy trade. No matter if it's a winner or a loser, it is a lousy trade. So and if I had a trading firm, I would not let any guy work for more than a day, a single more day, if he's producing lousy trades. That means trades that in the phase where you can control your trading are with an error, are with a mistake. And also remember now it's 3 minutes before 10 o'clock, and 10 o'clock we have the EFO numbers determined. So this will normally have an impact and the probability of a rising volatility. So I recommend to stay flat with a short-term scalp trade here. 10 o'clock, so 2.5 minutes, I would stay flat again and not recommend to trade, because expect higher volatility. EFO numbers, Germany, EFO index, 10 o'clock, 2 minutes. And you see this again with my risk reward. You see how important it is then when you only take on one position. Okay, this was the numbers now. This move here created by the EFO numbers. But you see this how important it is. What I told you with the calculation when I said this is my risk and my reward is only this former VPOC. All right, the middle of the distribution. So and see, it only hits exactly. You see this? It only hits this area. So that means it was right to calculate with only the reward when you come in, get into the trade at 43 around, or maybe 45. There's only this at 49. And they only made one tick higher before getting back. Okay, this was initiated by the move, by the news, by the EFO numbers. This moved down the 11 ticks down to the bottom side. But anyway, I just want to tell you that it's not smart if you're looking for a one lot position to go only for the at the moment POC to go even to a higher volume edge, because this is not realistic in Bund. Market will play target number one, may fail, go back, have a second chance, go to the POC, trading around, and then maybe making the other side. But for the first target to make some ticks already, to get paid for a longer trade or whatever strategy you're trading, it makes absolutely sense to calculate with the target number one. This would be in range trading thinking from outside to inside, first to the POC or the middle of the normal shape distribution and then to the edge. So if you're trading two contracts, you can go this way. Number one contract trading to get to this target, got paid, let the second contract in your book and wait for price going back to the lower side, see responsive buying, say everything is okay, and I wait then till they bouncing around and then reaching the target. So in this case, you see again it worked out. That means price could not make it higher first, was rejected here. Of course, this was also news initiated, but you see this all time. You see this all time long, that this is working this way. First the region, maybe the VPOC, and then the other side. So what's your calculation for risk? How you can mathematically say this was a smart trade then when you're never reaching your target? Then you have to recalculate. Is your target maybe a little bit too over enthusiastic and say, okay, now always making 20 ticks. You're not making 20 ticks in Bund with a scalping. You may expect, it's good to expect about 5 to 7, 5 to 8 ticks with your contract number one. This would be good. And always see the risk, maybe 4 ticks. And target number two in a range trade would be the other side. That gives you at least a 10 tick opportunity. And you see this again, how it was played out. And that is very important to know your targets and also your risk. So no more numbers at the schedule so far for this morning at least. Next numbers at 2:30 American. But in the morning there are no more numbers at the schedule. So now we can expect that volatility may, or the trade, the speed of orders may decrease now, and may they find a balance within this area. If there's nothing coming from the outside, news, economic from the G7 or something else, or some tweets from Trump, then you can expect then that the market now is going to slow down. No information from the outside will slow down. No information from numbers on the schedule, which are not anymore because there's no more numbers before the afternoon. Expecting slowing down. So for me, this trading session is almost about to be over. So I stayed flat as no hypo appeared within the cash market. Hypo 1 was played in the pre-market. Hypo 3 was played in the pre-market and around the cash open. And sorry, Hypo 2. and that means nothing to do so far. Then we had too high volatility for good calculate risk and reward, and now we had the numbers at 10 where we intend where I recommend to stay flat. And now if market at least can stay in range and made a normal distribution and range between the 54 and 40 area, and we see a decrease of volatility, then I may look for another range trade. If this does not happen, then flat for this session so far, and will also stay flat. And you see the same game. We're at the VPOC. That means VPOC is again switching from this area to the middle here. And you see now looking at the footstep, you see here this behavior again, seeing popping up liquidity, algo dominated trading, thin market, and at the VPOC, you see how the liquidity pops up. See it again here, the upside, downside. And that makes, of course, other traders then to close a long position. They take this liquidity then to push it to the next edge, and algo trading and switching of orders. Look again in the delta. See this here, what the delta looks like on such a market. No matter if you use Bookmap or Sierra or other charts where you at least have delta. That is what you need to see, delta or ask bid difference, volume, and the liquidity in the order book. And of course the volume profile and the areas you're prepared from your big picture preparation. Then, so see this here, this area where all this liquidity popping up, popping in, popping down, popping in. I will spread it a little bit. See this here, plop, 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 plop. So typical. And look at delta. I mean, take a look what this looks like. And compare it to a normal day with normal volatility and normal liquidity in the book. It looks totally different. And yeah. It's smart to stay flat. Reasonable. It's very important, of course, also to separate, to say then, okay, what then if I'm not 100% sure? And on a day where I'm maybe good prepared, but I'm not sure, everything looks good compared to today, but I'm not feeling so confident, then it's a problem of your mindset. That's okay if you're not confident, but you have to have a plan how to become more confident, and knowing that the reason may be your mindset. And this, of course, causes then some chaos, some noise. So that means market already brings very much noise, which you have to find the signal. But you as a person, think of it, you are the person, you're bringing extra noise. This sounds stupid, because why would somebody bring extra noise into a already chaotic, noisy system? But it's the way it is. You as a trader are the big risk to your trading, and on the other side, the biggest chance also. And it's very good to say, if you're working on your mindset and compared today, where it's not looking good for the environment and everything, then when it looks good, and then if you're not taking on a trade, then this will be at the end cause a minus in your P&L, a underperforming or even crashing your account, because you have to learn that when it's reasonable to trade, then you have to execute every trade you see. And if it's reasonable to stay flat, then it's the right thing not to execute. But in 80% of the time, when you see the whole, looking at the complete year, I would say 80% of the time, or at least 70-80%, you have to execute, and you have the opportunity to execute every trade. But if you're trading this kind of volatility and low liquidity market, then today you have to execute every trade you see. If you're not, math will work and be against you. For me, I'm looking for normal liquidity in the order book compared. Today we're not normal. We have about half the contracts in the book than usual. And also the volatility, of course, then is a little bit higher. I will not trade because my plays don't work with this calculation, work good in this kind of market mood. Then you don't trade. And this will make your P&L at least not shrink. And it's very important. So that's okay. The art is to know when it's reasonable to stay flat and when it's reasonable to take on every trade. There's no, of course, something one needs to learn, but it's not that complicated. The technical side, again, is not the most complicated in trading. It's something you can learn within a few months. Then, of course, you need some experience, that growth, I would say, in 1 to 2 years. But if you're starting early, then after already know the market, how the market participants works, how the market works, and then developing your own technical skills for the analysis of macro and micro picture, then, and this is maybe only a few months, then the next thing is to again and again work on your mindset. This is the more important thing, because this is something personal. This is something kind of confronting yourself with your inner old behavior. And of course, this is not easy. But if you start in it and getting it, then at some day it even will be some kind of fun. And then brings new motivation into the game, because you see how it impacts if you create, how it impacts your trading for the good if you develop new behavioral patterns. Okay, market again. Now we've seen that the volatility a little bit slowing down, but I'm still don't like this day, because we're still having only look at the 39 level, 160, then 100, 143, 240, 176, 97, 130, 110, 154. So only very, very thin order book. I don't like this, because we may get some spikes. You may get stopped out. And looking here for the target area again, I'm not sure. I think target number 1 still only about the 46 area. And when you're entering here, what you accept as your stop? Tell me. What is a stop worth in a thin order book? So you see these big numbers have no impact into this market. That means we just range in again, we stay in the range. You see it doesn't matter. Even if you see that here they sellers coming, sellers, market as they trying to buy, selling, that doesn't mean nothing today. Because this is a very thin order book day with, of course, then increased volatility due to the low liquidity, due to the trade war, due to the uncertainty in markets. Recovering in stocks brings a little bit pressure into the bond. Recovering in stocks maybe also again caused by the saying and tweets of Mr. Trump again, that China called them to get back into the negotiations to the trading war. And no matter what, we see this in this kind of markets. The delta is a zigzag, and market overall spinning around. This is no market mood for my place, and nobody cares if there's some big guys buying here or selling here or buying here. It can change within minutes again. So that means you don't have to say no. You don't determine. No, you don't measure delta. You cannot measure. Excuse me. You cannot measure the delta by the same way you would do in a normal liquidity market, in a normal volatility market, because we are in an algo market, we're in a thin liquidity, and we see delta just jumping up and down and up and down and up and down. And that doesn't mean that we are here about to start a long trend, which you obviously see. That doesn't mean that we are about to start a short trend at this area, which you obviously maybe made to find here around this area. That's just not the way. It's typical that big, huge numbers in the tape are in a mixed tape, and big numbers are coming in. And also then when we are at the POC, you will see then again we switching back at this behavior. Wait for it. When we find acceptance around this area again, here at the POC, you will see then again the liquidity of the algos coming in and popping up. And still the same sign as all day long. No signs for we getting back into a trend or whatever. It's just this market mood I would call the zigzag thin liquidity market mood. This is not good for my place. And nobody needs to trade then. Why would you? If you made an 80% of the rest of the year, you can make good money. Or 70. Why would you trade in this 20-30%? Do you believe me that you can crash all your account within only 10% of the year? You may even not need 1%. You can crash it on one day. So don't fight the market and try to trade them. This is stupid. we're at the strong low, but you see that some people sell into it. Even though, look at the majority of people, when coming to this level here, we saw buyer. That means, so what you're doing now, what is this looking like? Okay, clearly first, there's a delta divergence. That means the selling is not confirmed by the delta. That means we saw selling, but this was weak. You see, they sold into this level first here, this edge, volume edge, okay? You see this here. They took it out and then some sellers coming in, and this was a very, very tiny sellers. See this? That's it. That's all. You see this here? The button? You see? This little streak here, this was the selling. And then we also saw selling in this candle and this. But overall, we see more buying than selling. That means just a vacuum of liquidity on the downside. That is not the sign of a strength in selling. So if you're looking now for the long, of course this would be not good, because we want to see first double rejection. Number two, we are in a very thin market. In a very thin market, I don't recommend to trade here the reversal. But just technically, we are here in a better position for a long than for a short, because you see here the selling was very, very weak. Most of the selling appeared within this streak. That means this was a selling, and this, and this. But it was a weak selling. So that means as long as we don't see, boom, really increasing selling volume to the downside, you have a higher probability now with the long. But of course, I'm not gonna trade it the long here, because see what this last little bit selling can cause in a thin order book. I hope you see this, guys. Look at the footprint. Look how thin the selling was, but causing a lower prices from the 44 area down to the 30 area. But you see overall there was only little selling. And look how much people bought here. Of course, at the strong low, there are buyers. But the order book is not protecting. That means even if they hit the bid a little bit with some selling, they are successful. So that means technically this is a good area now for the long, because you see with this live how they are playing the shorts and the longs and the delta. You see you're at a very important mark now, and you see that there is a lack of interest in real selling. Means you're having a better chance now. The prices are coming back to this edge here at the 40 level. So if you're in a long here, the problem then is with the thin liquidity is, where's your stop? Where is it? Is it here or is it here? I don't know. Tell me, where's the stop? Because obviously some little selling, and you don't need more than little selling to push the price 5 to 10 ticks lower. So where's the stop? Is it then here? Is it here? Is it the 2 tick, my 2 tick rule now? 2 ticks below? Where is it? Tell me. Where's the reward? Is it the edge? Yes, definitely. For me, the reward only the next edge here around the 40 level. So this would be my expectations here for this trade, to reach this area of 40 to 42. This would be my number one. But again, when you take on the long, where's your stop? Where's your stop in a thin liquidity market? Where is it? Tell me. So to see, nobody cares for the technical, for the delta now. It doesn't help you if the market, in this case, is thin. So, what you do then? Right. Please, right. You stay flat. Now even some people trying to push lower. See this here, liquidity appeared here in the offer. Um, Already disappeared again. So maybe some spoofing. So this is what I mean. Delta doesn't confirm this short here. That means on a day like this, it would even be fatal if you're trying to learn trading here, because Delta would tell you nothing but that we are in a low liquid market. And if you're not able to see in your order book and have a look in your order book and see, okay, I don't know, is this confirmed by volume? If you don't notice, this would look like a textbook short. See this here, pulling back, getting into it. But overall, I stay with this concept that this is no short. It is no long either, because we don't know where to put our stop. You see, I would be stopped out with my 2 tick stop rule here, as the low is already taken out again, more than 2 ticks, as it would take out by 3 ticks. So this is also no trade for the long side. But technically, this confirms us just that there is nobody really interested in selling into it right now. As long as there is no increased sell volume, no selling into this level. That means you stay flat. It doesn't fit to one or the other play. Range long? Thin market. Short trend? No. We don't see this confirmed by volume. We don't see this confirmed by the short-term bias. All right, now putting everything together, you see, this was not the moment for me to look here for the short, as the overall delta did not confirm that there is interested in a trendish selling. The sellers then got in with only small, tiny tries, of selling, and they sold, of course, into a very thin order book. They reached then the previous trading day, the Friday POC here at the 24 level, and at the end, no more selling. All the time, we had some delta divergence. That means as they sold into this level, we all the time seen that this small selling caused this move. So that means this move by the small sellers wasn't confirmed by the overall bias. That means this is not the trender setup for the short I want to see. Anyway, I didn't trade it because I told you that I'll stay flat here. Okay, let's wait the next few minutes, but then we will end the session without any trades. For my case, this was not the right market mood for my place, and I just stayed flat. I hope you did good too. And yeah, a few more minutes, and then I will close this live session. All right, then for me that's it. Let's call it a day. No trade for me. And I hope you did good as well. You could learn something today. I hope so too. And may you have wonderful trades. And congratulate if you do it to your. Let's call it a day. And that means if you had some place for this special market mood today, then congratulations. It's super perfect. Then just be sure that you are aware of the kind of market mood of a higher volatility, of a lower volatility market. Do you know? And just learn about today. You can learn what the impact is on your place on the micro level. So I think from this perspective, this was a very interesting day, and you can learn almost in every day. And every day you can learn something important to your trading. Yeah, thank you for watching. This is Anton Hopfel for Manapa.